Good morning, traders. Welcome to today's market review. This is Fred Razak at CMTrading. Today is July 28th, 2022, and today is Thursday morning. So looking at the highlights of the day, the market's reacting to the FOMC, each in their own individual way. There is no major economic events today, but there are quarterly earnings still coming out of the United States. So after 10 o'clock South African time, we have Apple and Amazon publishing their quarterly earning reports. This is the last of the big tech's earning quarter reports, so keep that in mind. Now looking at the various markets, starting out with the Forex symbols, the British pound surged higher yesterday, and then looking at the indices, the Dow Jones and the NASDAQ both surged vertically after the FOMC rate statement of increasing the interest rate by 0.75%. That's a 3 basis points. That's a big number. Now looking at commodities, gold gains while oil steady. Looking at stocks, Google had a nice gap and go. That was after its earning reports as well. And lastly, cryptocurrencies, Bitcoin gains. So let's take a look at the markets and see what we can expect from today's trading. So we're looking here at the GBP USD at a 4-hour chart, and you see this massive surge yesterday as we broke above the 200-day moving average to 121.78 from 120.49, a nice 100 and so pips. Now looking at a daily, we're almost there. Okay, you could see that we are almost there, breaking out to new and changing our downwards momentum. I mean, this is solidified that we're kind of finding ourselves in a new basis point between these two levels. Now looking at the Euro USD, didn't bounce as hard. Went to 102.13, did go higher, but not as hard. Okay, so just keep that in mind that the GBP is changing character and getting stronger vis-a-vis the Euro versus the USD. Now, Aussie USD also strong, and it did rally finally above 0.7. Now, this is the first time we've done it since June 14th, since we dipped below that 72-ish level, and so that's a big step for the Aussie dollar as well. Now, jumping into commodities, gold first, at that resistance level of 1741. Now, you know, the reason I bring this higher is because resistance levels are very important. Support levels are very important. That's mostly where the trading is actually happening. So you want to be aware of it. Okay, we are hitting that major resistance level, which was a previous support. So just keep that in mind. This may be a point where we do retrace here, but if we do take it up higher, then we may get to the 1767-ish level as well. Now looking at crude oil, just converging here, okay, really consolidating here as it's making like a wedge formation, higher lows, lower highs, and just getting into that wedge kind of look. It's not there yet. It's trading at 98.52, and my guess is it's going to go further down, okay, because production is there. Kind of the war in Ukraine kind of is put on the sidelines, at least for now. So just keep that in mind as this is unfolding as well. Now, the big story is the Dow Jones. Look at that, 32,150. We're looking at a 4-hour chart. We went vertical yesterday. I mean, this was really just a massive move to the upside from 31,767 to 32,151. That's over a 400-point move just in this 1 day of trading. So keep that in mind. Now, we are hitting several levels that is a problematic, okay, where we're getting into resistance-ish area here as well. So looking at the NASDAQ, did rally, but didn't rally as big as I would have anticipated it to rally. So that is some kind of warning in terms of where we can possibly go going into the next couple of days. Now, looking at the individual stocks, okay, so yesterday was all about Facebook. Facebook looking into the intraday, it actually bounced off of that supportish level, 155. It did miss its earnings, but the stock was up in after hours. So this is something you got to keep in mind. When these stocks come out with worse than expected earnings, nevertheless, they're not as bad as they would have thought how bad the news would have been, if that makes sense. Meaning they thought the news would be so much worse, and so they reacted to it already. So now that the reaction is not as bad, the outcome is not as bad, the reaction is now, oh, we're not as bad as we thought we were. Kind of an environment, and that's what's been happening. Looking at Microsoft yesterday, we did rally back as well, and Apple coming out with news tonight. It's there, but it's still not finally all the way up back to its level, so keep that in mind here as well. Now lastly, looking at Google, did get that gap and go. Look at that beautiful gap and go. We gapped up and we've been going. Now the next real resistance, hard to see here because we had that split. So it's really hard to see here where that resistance is, you know, in terms of giving us that perspective of how much further we can go up on the upside. Now today may be a very telling sign because let's see if this was just short squeeze or really was it buying, okay? Because you get surges in a bear market all the time. Let's see if it's sustainable. Now, we are looking at Bitcoin lastly, okay? And it did surge back to the 23,100-ish level. Keep that in mind. Just we're going into the balance of the rest of the summer. August is usually, a month that we kind of taper off. So that could still happen as we continue. So we will be covering tonight in Facebook Live our session in terms of what do we expect from Apple and Amazon coming out with their earnings report. So we'll see you here. God bless. Have a good day, everybody. Bye-bye.